there from 105.7 Light FM. It's 70, they take it up to 81 degrees now in Sebring. We're going to see 95 today. Chance of rain pretty low because there's a bunch of dust blowing across the Atlantic from the Sahara. That means we get hotter and drier. So wear something you can take off this afternoon without getting arrested. That's always good advice around Florida. Even better today, though. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. Always good advice, and let's get some good advice from Philip Statler from Statler Financial Services in downtown Sebring, and it's time to talk money with him today. Philip, good morning. How you doing today?
Good morning, Dave. Hey, doing well today. You know, we are almost done with this first full week of July, first full week of the quarter. And we're just getting a few little reports here and there, what's coming in. I mean, more horrific has been the issue with Iran popping its ugly head back up again. We thought maybe that was done, but we'll see if we can get that thing under control.
Yep, we'll get earnings season to talk about next week, but we got a couple of household names this morning in the interim, absent virtually any data dump out of the government and a very limited number of reports. Yeah, we're antsy about Iran. Yesterday, it was kind of a bloodbath on the blue chip side of the fence. Dow lost 577 points. S&P was down by 21, but we had a kind of a turnaround in the chip market, partially because the chip manufacturers got inordinately low, and we actually bought the NASDAQ back up by 52 points. I didn't get a chance to check the Russell 2000, but I'm kind of betting it was off by a little bit. Am I guessing right?
Yeah, it was off by almost 0.9%. So, yeah.
I was afraid of that. Yeah, it was kind of interesting. After everybody said, oh, my gosh, the chip market is down into bear territory. Intel stock is currently trading at a level they haven't even seen during the dot-com bubble. And NVIDIA right now, our golden boy chip people, NVIDIA right now is as cheap as it was in 2019. Can you imagine that? Boy, talk about scaring people out of an entire sector. That's amazing, isn't it?
It is. It is. It doesn't, they've definitely gotten beat up here lately.
Absolutely. It's forward price earning, like I'm kind of obsessed with. Its forward price to earnings ratio for NVIDIA right now is 22.2. That's actually inordinately low for a tech stock because I'm kind of used to seeing they're trading at, 25 to 28 price earnings ratios. They're almost trading like the blue chips are these days because their multiples are up in the 20s. That's kind of scary because, you're used to taking kind of a flyer on the high-tech chip stocks, aren't you?
Well, yeah, it makes them more reasonably priced, right? If they're at 22, 23 forward earnings, well, that's where you'd like a company to be instead of out there on the edge like it was in 1999, 2000 when the dot-com bubble burst.
Exactly. Yeah. Remember, growth stocks have a tendency to work at much higher multiples on their forward price to earnings ratio simply on the grounds that people expect them to be growing. It gets scary when you see the S&P 500 trading at like 28 and 30 times price earnings. Take the 500 biggest companies in the country, you kind of assume they're established and you don't expect them to be trading at multiples like that. But when NVIDIA gets down into the bottom range of where the S&P 500 is, it kind of makes you sit up and take notice, and evidently a few investors did the same yesterday. The update on Iran, we kind of calmed down a little bit during the day, was that we started the major shooting. President Trump quoted the day before as saying the ceasefire is off, yada, yada, yada. Then just to add a little bit of extra mix to the fire, he said we were dumb to let Greenland go back to Denmark, and we're ready to take them over, and Denmark said we'll defend it, which didn't help in the least. But, then midway through the day yesterday, he said, this isn't going to take long. It's not really a major outbreak of war again. We're going to have this done in a little while. And I saw everything kind of trail upward during the day. Looks like we got a little bit of the same attitude continuing this morning. A sigh of relief would be a good description, right?
Yeah, it would. It is. We're seeing a little bit of green ink this morning as we get started. Looking at news, we haven't talked about interest rates in a while. 30-year Treasury, Dave, up over 5%, 5.08%. That's the highest I can remember seeing in a while.
And that was almost a knee-jerk, immediate reaction to us starting to throw rocks across the Strait of Hormuz again. Interest rates are almost a better barometer of what's happening in the world economy than the stocks are these days, aren't they?
Yeah, they are. As those yields go up, there's some behind the scenes stress going on in the marketplace. We talked yesterday about really the only thing happening in the economic world yesterday was the Fed minutes came out, and I
Mm-hmm.
found it interesting. Here was the Chairman Walsh described it as a family fight over policy direction.
He said he wanted that. He's got it. You picky,
Exactly.
picky. I love it. Yeah. Yeah, the general overall attitude is that the minutes pretty much gave us a solid signal we aren't going to see any rate cuts until 2027, no matter what Walsh wants. He ain't going to get it because the only discussion I saw in the minutes was whether or not we're going to raise the rates now or later this year. There was no discussion about cutting the rates whatsoever, right?
Yeah, they're absolutely not. And so it's going to be, one of those things where everybody that thought in January we're going to get rate cuts this year, well, you might as well kick that can until next year because it's, I just don't see it happening.
Yeah, so if you like 5% 30-year bonds, you're probably going to get your wish for a little while. I've noticed one thing probably that calmed the market down a little bit. Oil appears to have kind of ratcheted up and finding a trading range in the $73 to $74 a barrel range, which probably is good news because it means the oil markets are responding a little bit like the stock markets are to the hostilities. But I mean, how would you like to own a tanker that's sitting on the other side of the Strait of Hormuz? Because you know darn good and well, first thing that happened when we started throwing things back and forth across the strait, those little boats the Iranians have left have been leaving little mines around the Strait of Hormuz. How would you like to own one of those tankers?
Yeah, that's a gamble, isn't it?
Yeah, and the ship owners are saying, I'm not sure I want to go through there. Let's let somebody else blow up their boat first. So that's pretty much where we're at. Uncertainty as it stands at the moment, which kind of leads us to, at the very least, we've got a little bit of corporate information. I understand Pepsi Cola reported. Are they selling any soda pop these days?
Well, if my internet works here. There we go. Yes, however, they missed on earnings
Oops.
by a penny a share, came at $2.20. Now, on revenue, they were ahead of expectations. But because of that, it looks like they were falling. Yep, they're down 3% this morning before we get going. And that's a barometer because they do so much, right? They're in the drink industry, they're in the snack industry. So, when snacks and Coke or Pepsi start getting hammered and not meeting expectations, then people are pulling back.
I mean, chips and soda pop is one of the four basic food groups. I consider that a staple.
I think
It,
everybody does.
yeah, it is an indication. We got another one too. One of our favorite brands, Levi's. How the jeans business
Yes.
doing?
Levi's reported, and they had a good quarter. They beat by 4 cents a share, came in at 28 cents. Revenue ahead of expectations as well. Now, I think they're getting hammered a little bit this morning because of projected forward-looking EPS, earnings per share. They came out and said they expect this next quarter to be between 34 and 36 cents a share. That was well short of the 38 cents a share that the analyst had put out there for their expectations. And so that has Levi trading. They were down as much as 4%. Yeah, they're still down 4% right now.
Ouch. Well, they got to keep in mind they're a fairly new publicly traded company. We're still trying to figure out the business flow for them. I know people laugh at me when they see me wearing jeans during the summer in Florida. I mean, it's pretty much half the country only for the summer months in the process. I'd kind of expect a slower guidance this time of the year, wouldn't you?
Yeah, I would. I mean, you think they're gonna, they're not going to sell a bunch right now. Now get ready for, back to school shopping here coming up shortly. You'd expect them to see a better month that month and quarter for sure.
That's a point to be had. The quarter includes both back to school and the summer doldrums. It makes some sense, I guess. Talking about the stocks as they're going, all the upset in the marketplace, a lot of us are going to be just primarily relying on Social Security during our retirement and have modest retirement funds. Talking about thriving on Social Security, even a guy that specializes in portfolios has some advice on that side as well, I guess, huh?
Absolutely. We're going to call Thursdays Thrive Thursdays because we want people to thrive through retirement, Dave. And so one of the things we want to talk about today is, one of the biggest decisions that folks have to make is, when am I going to turn on Social Security? And a lot of times people get it wrong. There's this Tennyson that says claim early at 62 and your check is permanently smaller. It's cut by about 30%. And when you look at that, that's a significant reduction in lifetime income. If you wait until your full retirement age, which for most of us today is 67, you get your full benefit. If you wait all the way to age 70, which is the longest you can wait and get any benefit out of it, your benefit grows even bigger, roughly by 8% a year for those 3 years that you wait past that full retirement age. So let's look at somebody at 62. They retired. Instinct is to grab it now. Get mine while I can. I hear that a lot, Dave. So at 62, he collects about $1,800 a month. But if Tom waits till he's 70, he gets like $3,100 a month, guaranteed for the rest of his life. Now, here's a phrase nobody asks about, and that's the break even, right? Where's the break even? Well, 62, if you're healthy, the average 62-year-old will definitely live long enough to break even because the break even is about 80 or age 81. And then after that, hey, man, you've got the winnings are on the table. So takeaway, claiming early isn't always wrong for everyone, but look, you should be looking at it as your decision and on your circumstances, not somebody else's. And your spouse matters in all of that. And so it is part of our income planning process, Dave, to kind of look at when is the best time for somebody to start taking their Social Security.
I think you make a valid point. There are no one rule of thumb pat answers in the process. The standard, I've got a very modest private retirement account, so consequently cash flow meant a lot to me, so I opted to file for full Social Security later. Somebody with a fairly good nest egg, you can make the decision differently in terms of immediate cash flow for the lower benefit, but more years ahead. Everybody's got a different situation, and the answer's different for everybody, isn't it?
It is, Dave. It's definitely different for everybody. And you got to look at your current circumstances to see what's the best for you and your family.
Absolutely. Let's reset the table from the morning on the market. Yesterday it was down on the blue chips, up on the techs as we finally recovered on the chip market. What are we looking with the new world situation this morning, 45 minutes ahead of trading?
Still got a little bit of green ink this morning. The Dow is almost flat. It's up $25. S&P 500 is up 0.25%. The NASDAQ 100 is up almost 1%. And the Russell 2000 is up 0.33%. So not bad on that front. On the commodities side, let's see, silver up 2.25, still not above 60 yet, just barely. It's getting close. Gold's up almost 1%. And then crude oil is still up today, about 0.5% to $73.90 a barrel. Pretty close to where it was yesterday.
Sounds like a reset into just the, straight's closed trading range. I'll take it. Overseas, they were really relieved to get President Trump's statement that he didn't expect this to last long. The Asian Rim was almost uniformly up. Hong Kong lost a little, but the two mainland Chinese markets were up by as much as 3% at the close. Over in Europe, they're relieved as well. UK's got a little bit of a downtick this morning off of local politics, but the average European index is up by a little over 0.33% halfway through their trading day. Getting some advice to be able to make Social Security and my retirement plans gel together takes a pair of eyes that actually have the forward-looking ability to do that. How do I find you to take advantage of your abilities, sir?
Devin, give us a call at 863-382-0037. Love to spend 30 minutes with them, make sure that they're on the right path to the retirement they always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And you and me again here tomorrow morning about the same time on Lights. You have a pleasant day, and we'll catch you then, all right?
All right, man. Take care.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks. Again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you again tomorrow. Until then, so long.